Yeah, it's your boy Crypto Blood, and welcome to another episode of My 2 Cents. Today, we're talking about the federal deficit. It increased by 26%, hit an all-time high, or at least 7-year high. We're going to take a look at that, and also some shocking statistics out of Zero Hedge as well, referring to just how strong is this economy when they're receiving more benefits than they're paying in taxes. This cannot be sustainable. We'll take a look at that article as well. So again, welcome guys to another episode. And before we get started, I just want to go over the Dow Jones today. As you guys can see here, almost hitting all-time highs yet again. And you know, don't listen to the narrative that people put out there, fear-mongering, trying to get you scared of the next crash is coming and you need gold. And no, this is what's going to happen. We're going to have a melt up. It's plain and simple. All this easy money has to go somewhere. What do wealthy people own? They own stocks. They own bonds. So we will continue to see this stock market just melt up and up and up. So as you see again, we closed today at 26,958 bucks on the Dow Jones. Like nothing is wrong, but below the surface, we know this thing is crumbling. It is crumbling. However, you know, the president, the Fed, their job is to keep us, the sheeple, brainwashed and subdued and thinking that everything is just fine and dandy. I think the last My 2 Cents video, or it may have been actually a double spin, I talked about the repo markets and how they're pumping more and more money into that. There's something going on below the surface, but yet again, interest rates near zero in real terms are at zero, or even negative if you want to say, keeps this market propped up. But this article out of CNBC today talks about the federal deficit increasing by 26% to $984 billion for the fiscal year of 2019. That is the highest in 7 years. The U.S. Treasury for Friday said that the federal deficit for fiscal 2019 was $984 billion, a 26% increase from 2018, but still short of the $1 trillion mark. The U.S. government also collected nearly $71 billion in customs duties or tariffs, a 70% increase compared to the year before. The gap between revenues and spending was the widest in 7 years. Defense, Medicare, and interest payments ballooned the shortfall. As you can see here, $71 billion increase in customs and tariffs thanks to Donald Trump. And I understand what he's trying to do here, but I think overall it's going to have a negative impact on the American consumer, because all that's going to happen is these companies are going to pass those differences, those increases in tariffs onto the consumer. So as they increase the tariffs on these Chinese companies, the companies are just going to increase the per unit amount for those goods. And so, i.e., that gets translated into a smaller margin for companies here in the U.S. that are buying, which we know we buy most of our products from overseas. So they will just pass that along to us. So I don't think that Trump's tariff strategy is really going to work out. We'll have to see what happens. And so the Treasury said on Friday that it did increase to 984, but it was a shortfall from the 1 trillion mark they previously forecasted. But hey, I mean, you forecast really high so that you come in right below it, and then, hey, it looks all good, right? The gap between revenues and spending was the widest it's been in 7 years, as expenditures on defense, Medicare, and interest payments on the national debt balloon. The shortfall, the government said corporate tax revenues totaled $230 billion, up 12% thanks to the rebound in the second half of the year. Individual tax revenues rose 2% to $1.7 trillion. I'm not going to read this whole CNBC article because I really don't like reading mainstream media articles because it has so much spin on it, but I just want to highlight two bipartisan spending bills combined with the administration's landmark tax cuts, however, have defied the typical trends and instead aggravated deficits. But don't get too happy, people. The Congressional Budget Office does project that the $1 trillion deficit could come as soon as fiscal 2020. I bet it will come even sooner. But what I really wanted to show you is that this article from Zero Hedge talking about how strong is the economy really Americans receive more in benefits than they do in taxes they pay. I should say, yeah, this is a recipe for disaster and is unsustainable. But how long can they kick the can? Well, they've kicked it longer than I thought they could for 10 years now. And I'm just be honest with you. I think we're going to see more of this. It's not going to end anytime soon. We may see some crashes from, between now and in 2020, 2021. But is the whole economy just going to collapse and reset? Highly doubt it. But there are some ways you can take advantage of these environments of low interest payments, low interest money. One way, of course, I think it is by playing the crypto game. Bitcoin up over 15% today. So that lets you know right there. That's a play that we should look into. But anyhow, the article points out a tweet from Donald Trump back on July 31st of this year. He said what the market wanted to hear from Jay Powell and the Federal Reserve was that this was the beginning of a lengthy and aggressive rate cut cycle, which would keep pace with China, the European Union, and other countries around the world. So, for those that think that Donald Trump is for the people per se, no, I think he's for making America great again by making big corporations and banks and Wall Street great again, or continue to make them great. They haven't skipped a beat since 2009, while most of America has suffered. So, don't think that he's here to save us. He's not. He's a businessman first, and you have to remember that. The following chart should quickly put that claim to rest. As Zero Heads points out, that red line you guys see as steps up and down is basically the average growth by cycle, and it's just heading lower and lower and lower. As you can see, the dotted arrow showing us there's nothing good out of this. The economy is not booming. Unfortunately, I hate that Donald Trump has switched his narrative from pre-election Donald Trump saying that these numbers are all fake and don't trust them and so on and so forth, to now President Donald Trump is touting these economic numbers and bullying the Fed into lowering interest rates. So this is crazy. And the blue line you see going from bottom left to top right is the total debt as percentage of GDP. And we're currently sitting around 350% over our GDP in debt. Insane. I'm a visual person myself, so I love showing these types of charts. Basically, this one is showing the percentage of working age population, and it's just getting older and older. We're working longer, and that has an effect on younger workers entering the workforce. There are no jobs for them. The really simple jobs are still being held by some of our older generation. And as if we needed to make things even worse, AI is eliminating even those jobs. The article goes on to talk about if employment was indeed as strong as reported by government agencies, then social benefits would not be comprising a record high of 22% of real disposable incomes. Here is the breakdown. They say 40 million Americans are on food stamps. An estimated 50% of those 330 million Americans in this country get at least one federal benefit, according to the Census Bureau. An estimated 63 million get Social Security, 59.9 million get Medicare, 75 million get Medicaid, 5 million get household subsidies, and 4 million vets get benefits. And of course, those numbers continue to rise. And of course, without government largesse, many individuals would literally be living on the street, the article says. The chart above shows all government welfare programs and current levels to date. While unemployment insurance has hit record lows following the financial crisis, Social Security, Medicaid, veterans benefits, and other social benefits have continued to rise and have surged sharply over the last few months. Meanwhile, there's a coordinated attempt to keep these assets like stocks and bonds elevated through easy money printing. As you guys already know, I'm not trying to beat a dead horse here, but I'm just trying to show you charts that really illustrate what the situation is and to what magnitude we are really in some deep stuff here. And yet here's another shocking chart, this one about consumers. And if you look at the one that's in the blue, that's the gap between real DPI and cost of living. It is insane. And to be honest with you, since 1999, we've been in the negative here. and it's just been accelerating exponentially into the 2019 era. And this is in no way good, and it has to end in some type of crisis. Again, I don't think a reset, meaning we start from zero, everything goes to zero, and gold bugs come out victorious. No, I'm not in that camp. I'm sorry. I'm trying to give you the real and not sensationalize this for you guys, because I know fear sells, it really does, but I'm just trying to give you a good understanding of where we sit with things. Consumer credit per capita, on the contrary, has continued to go higher ever since really it accelerated. If you guys can kind of see that gap begin to accelerate after 1971. What happened in 71? We left the gold standard. That's when credit cards hit the scene and consumers began to extend and pretend, essentially. As our real GDP output began to slow, we had to compensate some way, and that was through credit, consumer credit, to keep us appearing as though we were the wealthiest country in the world. The bottom line is that America can't grow its way back to prosperity on the backs of social assistance. The average American is fighting to make ends meet as their cost of living rises, while wage growth largely remains stagnant. And to summarize this video, what I really want you guys to understand and what I want to drive home here is the whole act of the modern monetary theory. This is what we're experiencing, and this is why I don't see us having some catastrophic reset in the system where, as I've stated before, gold bugs come out victorious. However, I do see Bitcoin crypto holders definitely coming out victorious in the short run. We have to take advantage of this move that we're going to see in cryptos sooner than later, because they're already opening up the floodgates for suppression and manipulation of the crypto markets through ETFs and futures that they've rolled out just a month or so ago regarding to backed and their physically backed futures contracts, and their options are coming in December of this year. So they're going to have those on ramps to directly manipulate the spot price of Bitcoin. The CBOE and CME futures that rolled out in 2017, late 17, did not have a direct impact on the price of Bitcoin, but these new instruments that are rolling out are definitely going to have an impact on the price of Bitcoin in the next 5 years. So you have to position yourselves now to take advantage of this next leg up. So there's an article, and I'll pin it in the video below, that talks about this from the macro tourist. Everything you wanted to know about MMT but were afraid to ask. I won't read the whole thing, but I want to just highlight a couple of things. Modern monetary theory is a macroeconomic theory that contends that the country that operates with a sovereign currency has a degree of freedom in their fiscal and monetary policy, which means government's spending is never revenue constrained, but rather only limited by inflation. So in layman's terms, guys, this basically means that MMTers believe that government's red ink is someone else's black ink. Sure, the government owes dollars, but they have a monopoly on creating those dollars. And not only that, the creation of more and more dollars is essential to the functioning of the economy. And so here are some policy implications for accepting MMT. So governments cannot go bankrupt. We kind of knew that, as long as it doesn't borrow in another currency. And this is what puts us, guys, in a unique scenario within the world economy. It goes on to say it can issue more dollars through a simple keystroke in the ledger, much like the Fed did in the great financial crisis. It can always make all payments. The government can always afford to buy anything for sale, and the government can always afford to get people jobs and pay wages. Government only faces two different kinds of limitations. That is political restraint and full employment, which causes inflation. The government can keep spending until they begin to crowd out the private sector and compete for resources. And in fact, Professor Kelton argues it is immoral to not utilize this power to fix problems in our society. You guys really need to look into this MMT if you're not familiar with it. I will leave a link to her speech at Stony Brook University. It is on YouTube. Again, I'll leave a link for you to check it out. It's about an hour long, so when you have some time, kick back and watch that. I think you'll have a better understanding of where we are with our government here in the United States and how we position ourselves globally, this gravy train ain't stopping no time soon without some serious wars with other countries if it has to get to that point. And it really may. And that may be, a black swan event that causes everything to pull back. I'm not saying we won't have a crash. I definitely think a crash is coming soon, within the next year, in my opinion. But that doesn't mean that it's just some big economic reset and everything is just pandemonium and we're just gonna go around bartering with gold. It's not happening, people. You guys let me know your thoughts about this, and primarily about this deficit rising 26%, highest in 7 years. Leave your thoughts in the comments below. Make sure you guys like, share, and subscribe, and click that bell. That's most important for me, so you can receive updates on my channel. It's your boy Crypto Blood. I'm out of here. Holla!